Hello, ladies and gentlemen. Greg McCloskey from ForexLive.com. This is the Kickstart video for September 6, 2024, where I take a look at three of the major currency pairs from a technical perspective: the euro versus US dollar, the dollar versus yen, and sterling versus US dollar. So let's get started. Of course, I would be remiss if I didn't mention the jobs report which just came out. We did see non-farm payroll rise by 142,000, which was less than the 160. The good news, it wasn't less than 100, which I think a lot of people were expecting. We also, however, saw revisions to the prior months, which subtracted some 80,000 jobs or something like that. So it wasn't a good report for sure. The unemployment rate, however, did dip to 4.2% from 4.3%. That gave them some hope, I guess. But overall, it wasn't a disaster, but it's certainly showing slower growth and supports a Fed decision. That decision will be a debate between 25 or 50 basis points. Does the Fed want to keep from that unemployment, be getting unemployment? If so, then maybe a 50 basis point cut would be appropriate. Remember the lags in the economy from rate changes. So be aware of that. We'll know by September 18th. The Canadian employment rate also came out, and it showed about as expected employment change. The unemployment rate, however, did rise to 6.6%, which is the highest level if you take out the 2021 COVID period. So going back to 2017, that supports Bank of Canada continuing to cut rates down the road. Of course, they cut rates by 25 basis points this week, and it looks like more to come there. So let's take a look at some of the currency pairs. We'll start by taking a look at the euro versus US dollar, and you can see the uncertainty expressed by the price action here. I think the price originally moved to the downside, and then we saw weakness in the US dollar and the euro moving to the upside, and since then we've seen rotation back to the downside. All that volatility took the price above this swing area through here, which encompassed a number of different swing lows and swing highs going back in time to mid-August, thereabouts. And we see all the different times that the price either came into this area and either found a movement to the upside or a movement to the downside. So moving above that level was more bullish, but it again came right after the volatility of the report. We'll still look toward this area as a defining barometer for today's trading action. If the price does move above that area, we could see further upside momentum. Conversely, if we do find resistance sellers against this level, we could see a rotation back down toward this swing area through here, which was obviously a clean floor here before it became a ceiling through here with sellers leaning against that level and trading. Yesterday, we traded above and below it as the market prepared for today's jobs report, and the spike to the downside initially did take the price below that level, below the 200-hour moving average. But we're going to need to get back below these levels, including the 200-hour moving average, increased bearish bias, and the 100-hour moving average. So right now we're in between resistance above, support below, and we'll see how that pans out. But certainly the dollar is a little bit weaker on expectations. The Fed will have a debate on September 18th. Let's take a look at the dollar versus yen. Again, we see the ups and downs in trading sort of in the middle of that trading range right now, around the 143 level. I've outlined this swing area through here, which encompassed some swing lows and swing highs going back in time between 143.39 and 143.67. I'll put it in yellow here so we can see it more clearly. You can see how that's floor. Trading yesterday, of course, like we saw in the euro versus US dollar, up and down price action as the market positions itself for today's jobs report. Ultimately, this is going to be a barometer for our trading. Right now, the bias is more to the downside here, below that level. That's in the short term. If we do stay below that level, then the low price that we saw in the month of August at 141.678 will be the target on the downside. Taking a look at the daily chart, that level, this low right here, corresponds with the lows going back to January. The low price for January and for the year came in, let's see here, at 140.80. 140.80 is the low price from January, the first day of the trading year. So we have some ways to go before we head toward that level. And if we do get below that level, that would open the door for further downside momentum. Also, we have the 61.8% retracement at 140.48 as a target on the downside for the dollar versus yen. So ultimately, however, watching what this swing area through here between 143.39 and 143.67 as a barometer. Stay below is more bearish. So finally, let's take a look at the sterling versus US dollar, and like the euro versus US dollar and the dollar versus yen, we had some volatility, initial move to the downside. In this case, we did find support against this swing area and also against the 100-hour moving average. That's good from a technical perspective. We also moved back above the 200-hour moving average and extended above this swing area up through here, which is ahead of the extreme that we saw in the month of August. So this swing area between 132.21 and 132.30 will need to be broken. A lot of times you get these breaks to the upside extensions, and then we come back down to a prior support area, and then use that level as resistance, like you see right here. And then the job is to get back and stay above that level and hope that or look for the price to then move to the high price right through here. So buying failed right here. Sellers took over, corrected the market to the downside. Now we move back to that area, and that's going to be the barometer for trading here today, right here between 132.21 and 132.30. Get above it, it's more bullish. Stay below it, and we could see a rotation back toward maybe this 131.78 level. But certainly the bias is more to the upside here in the pound versus US dollar and dollar weakness here today. We are seeing the Dow Industrial Average near unchanged right now in pre-market trading. The Nasdaq index is down minus 28 points, which is much better than the minus 200 points that we saw when I turned on the screens this morning in the North American session. So things are looking a little bit better in those markets. We'll see how it all pans out in trading here today. My name is Greg Mikulowski. Good fortune with your trading. Bye-bye now.